Grains. The prices are swinging hither and thither from 500 all the way up to 800, all the way down to 600. What's going on with grains? Welcome to myfinanceteacher.org. In this video, I'll do my best to share my views on the grains, particularly on corn and wheat. And for more analysis, subscribe to the channel and hit that bell notification so you don't miss out on the new videos. Talking about grains, what I like in corn is that it's at the bottom of the Bollinger Bands. Usually I prefer to buy when prices are poking a few times, perhaps at least a couple of times, below relatively wide Bollinger Bands. This actually didn't happen on corn, but Bollinger Bands are wide, and back a few days ago corn did test the lower range of the Bollinger Bands, although we didn't see multiple pokes below that Bollinger Bands. I still like corn over here because it's probably close to the cycle low. It's actually very likely that cycle low came already a few days ago on the 26th of May. And that's exactly when we entered into a corn trade with the members at myfinanceteacher.org. So coming back to the cycles, the reason why I think cycle low might have taken place a few days ago is that if you zoom out a little bit, look at the history of last several years, the cycles on corn lasted usually on average for around 4.5 months, actually on average of around 142 days over the last several years. And the most recent low came when the cycle was 121 days long. This is a little bit under the usual duration, but we've seen a lot of other cycles when the cycles lasted for only, say, 100 days over here in mid-2020, or even 93 days only in late 2019. So from the short-term perspective, from the perspective of these cycles that last for around 4.5 months, it seems that the recent low was a relatively nice buying opportunity. Although from the longer term perspective, if you zoom out a little bit, corn after all has more than doubled over the last year or so. And even a more significant correction, perhaps coming closer to this consolidation zone somewhere around 530 to 540, is quite likely. If that happens relatively soon, perhaps over the next, say, couple of weeks, then that will be the more easily, more correctly identifiable cycle low. But while that might happen in the short term, in the intermediate term, I think we're going to see higher corn prices over the next several weeks, perhaps at least over the next 2 to 3 months. We see that corn has poked a little bit below the 50-day moving average, and again, if you zoom out, over the years these cycle lows usually took place below the 50-day moving average, and the cycle tops occurred above that 50-day moving average. So I like that corn corrected at least enough to poke at least a little bit below that 50-day moving average. RSI as well, although it didn't come to oversold levels, it came close to that at 36.5 back a few days ago. So while there are some risks in the short term, tell me what investment is without risks. In the intermediate term, I think there is a nice opportunity for a rally in corn. Let's move on to seasonality, which doesn't actually look well on corn, which emphasizes the risks here. Usually, as we see, early to mid-summer is a bad time for corn prices. But perhaps, as I've mentioned in some of my previous videos, trillions and trillions of dollars being printed are likely to weaken the dollar and push commodity prices, be that corn, other grains, or other commodities, higher. Next, let's have a look at the commitment of traders on corn. And again, what we see here is the emphasis on the risk. The red line is what I'm looking at. This is the commercials commitment. Commercials are usually called the smart money. And as you see, the commitment of commercials usually peaks, usually increases near the price lows. And these peaks in red line over the last several years took place anywhere between the level of 0 and up to about 200,000 on this small scale at the bottom of the chart. What do we see right now? Although the commitment of commercials has already improved quite a lot from negative 500,000 to around negative 300,000, it's still nowhere near to where the red line used to peak at the previous cycle lows. So again, the commitment of traders is actually not really showing a very bullish picture here. Instead, it's emphasizing relatively high risks on the grains. So the main question here is, are grains going to correct this significant rally that they've enjoyed over the last year, just because most rallies do tend to cool down for a while, or is weakness in currencies not going to allow a very strong cool down? That is a bit of food for thought for you. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Next, let's move on to the Optimism Index. And generally, it's a good idea for you to buy when this Optimism Index is relatively close to the green level. That's when nobody wants to invest into corn. That's when the proverbial blood is on the streets. That actually happened many times over the last several years. Here's one example in mid-2020. Near the cycle lows, the optimisms are very low. Everybody is basically pessimistic on corn. But again, since second half of 2020, with all the trillions of dollars being printed, cycle lows didn't actually push optimisms low enough to come anywhere near close to that green line. Instead, the previous cycle lows over the last, say, year and a half only took place when the Optimism Index was in its 60s rather than near 30. And again, a few days back, this Optimism Index poked down below 60 into high 50s, and there is a bit of a dilemma here again. The picture is of two stories. A story of risk, showing that the markets are still a bit too optimistic for a truly great buying opportunity. But on the other hand, there is a chance for continuation of the trend in grains that's been in place over the last year, and a push higher in prices as well as in this Optimism Index, at least up to those levels of 80 and above. Next, let's move on to wheat. And in some ways, the situation is similar on wheat, while in other ways, it's a little bit different. So what is the similarity on wheat? I really like that it's poked below the 50-day moving average. And what I like even more is that it poked multiple times below very wide Bollinger Bands. Poking multiple times below the Bollinger Bands usually indicates at least a temporary reversal in the trend. Over the last couple of weeks, the trend has been down, and since we've seen the pokes below the Bollinger Bands, and as the Bollinger Bands are pretty wide, I think there will be at least a short-term bounce in wheat. But the risks in wheat, I think, are a little bit higher than those in corn, because the ongoing cycle is only 58 days long. It's only a couple of months long in wheat. Again, looking back at history of several years, you see that cycle lows usually occurred below the 50-day moving average, and cycle tops occurred above that 50-day moving average. But what you also notice is that cycles on average last for 4 months. So perhaps this recent low that we saw on the 26th of May is not really our cycle low. Perhaps the cycle low is upcoming in another couple of months. So perhaps there will be a bit of a short-term trend reversal, perhaps a push to the middle of the Bollinger Bands, somewhere around 700 on wheat prices, or perhaps even something close to a double top as we've seen in the previous cycle, before wheat comes down again into that cycle low, closer to its usual duration of around 4 months. But even though the risks are relatively high on wheat, I do want to take a trade on the long side over here, because I think temporarily wheat came pretty close to getting oversold. We see this 14-day RSI came down to 34.2, although not oversold yet, but pretty close to it. And I think there will be at least a short-term rally, perhaps over the next at least a couple of weeks. So again, for that reason, we entered into the market a little bit early on the 21st of May over here. So the price on wheat right now is close to where I actually entered. Let's have a look at seasonality, which again doesn't really look that good for wheat for this short-term trade, because usually the early summer in wheat is a red month, where on average over the last many years wheat lost around 1% in June. While mid to late summer is, as you see, usually a pretty good time for wheat, which kind of generally agrees with our cycle theory, where wheat comes down perhaps into that mid-summer, and we will see a rally into the second half of summer, creating those usual green columns in the second half of summer and perhaps into September. Next, let's have a look at the commitment of traders again, and a bit of a mixed picture again. Looking at the red line, the commercials, the smart money, usually they peak their positions over the last years somewhere between 20 to 60,000. For example, over here in mid last year, their positions peaked at about 30,000 at that cycle low. Back in early 2019, the commercials positions peaked at about 60,000 at that cycle low, whereas at the more recent cycles, in late 2020 and in early 2021, cycle lows occurred when the commercials positions were only at about 20,000. Right now, over the last few weeks, the positions of commercials, the red line over here, let me try to zoom in a little bit. The red line has moved up a little bit, but the commercials positions are still negative, again pointing to some level of risk over here. If the commercials positions were somewhere around 20,000 or higher, that perhaps would indicate a more attractive buying opportunity. And lastly, let's have a look at the Optimism Index. Again, usually over the last years, if you zoom out a little bit, you'll see that usually nice buying opportunities on wheat come when this Optimism Index comes close to this green line, as it happens in mid-2020 and in many other cases. Again, over the last 1.5 years though, strongly trending commodities didn't actually give us cycle lows that dropped low enough to bring this Optimism Index down to the green line. Instead, over the last year and a half or so, cycle lows occurred when the Optimism Index was around 40 rather than close to 30 or below. And what do we see? Over the last few days, Optimism Index did drop quite significantly down to that level of around 42, which on the background of the last year or so is a nice buying opportunity generally, but versus the background of the last several years, it's perhaps still a little bit risky. Which again just leads you to that same question. Do you think this rally in commodities since mid-2020 is likely to continue as trillions of dollars keep entering into the economy? So I'll leave you with that food for thought. Let me know what you think in the comments below. And of course, remember to hit that like button and share the video with your friends. Have a nice day and good luck in your trades.